Why are some African countries richer than others? It's a question that's as complex as it is important. Nations like Nigeria, South Africa, and Egypt dominate the headlines when it comes to GDP rankings on the continent. But does a high GDP really reflect a country's wealth, or is there something more to the story? In this documentary, we're going to dive deep into the factors that shape the GDP of African nations, revealing the truths about economic disparities, why some nations are thriving while others are stuck in cycles of poverty, and how Africa can unlock its full potential for inclusive growth and prosperity. Love what you're watching? Scan the QR to join the community. Take, for instance, Nigeria, Africa's largest economy. With vast oil reserves and the continent's largest population, Nigeria should, by all accounts, be one of the richest countries in the world. But despite its impressive GDP, Nigeria faces huge challenges. The country struggles with extreme poverty, unemployment, and economic instability. The vast wealth from oil has not translated into prosperity for the majority of Nigerians, who continue to face extreme hardships. How can a country with such vast resources still face economic hardship and inequality on such a large scale? The answer is rooted in how the wealth is managed and distributed across the population. The answer lies not in the size of the economy, but in how the wealth is managed. Countries like Nigeria, Angola, and Venezuela are examples of nations that have fallen victim to the resource curse. These nations are rich in natural resources, oil, minerals, and precious metals, but instead of this wealth benefiting the majority, it is often concentrated in the hands of a few elites. This leads to corruption, mismanagement, and a lack of diversification in the economy, which creates economic instability and a dependency on fluctuating global commodity prices. The lack of economic diversification leaves many countries vulnerable when global prices for their key exports drop, further deepening their economic vulnerabilities. On the other hand, there are countries like Botswana that are a success story of economic growth, despite not having the same vast natural resources. Botswana's GDP is among the highest in Africa, and it's a prime example of how strong governance, transparent institutions, and responsible management of resources can lead to sustained growth. Botswana's government focused on developing a robust diamond industry, but they didn't stop there. They invested in infrastructure, education, and health, building a diverse economy that is less reliant on one single resource. By maintaining sound fiscal policies and fostering strong institutions, Botswana has avoided the trap that many resource-rich countries fall into, and has created an economy that benefits a wider portion of its population, driving growth across various sectors. But is it only resources that determine wealth? Not necessarily. The economic landscape of a nation also depends heavily on its political environment and governance systems. Countries with unstable governments, poor governance, or weak rule of law often struggle to develop a sustainable economy. In countries where corruption runs deep, the wealth generated from resources or industries rarely trickles down to the people. Instead, it ends up in the hands of a few powerful individuals or multinational corporations, leaving the majority of citizens without access to the opportunities they need to thrive and make meaningful contributions to the economy. In contrast, countries with strong, stable governments tend to build better infrastructure, offer better education, and attract more investment, which leads to higher economic growth. For example, countries like Rwanda and Ghana have made significant strides in recent years, not because they are abundant in resources, but because their governments have made investments in key sectors like education, healthcare, and infrastructure. These investments have created an environment where businesses can grow, jobs are created, and people are empowered to contribute to the economy, fostering a vibrant middle class that can drive further development. Let's take a closer look at South Africa, Africa's second-largest economy. South Africa's GDP is driven by its industrial base, including mining, manufacturing, and services. But despite its economic power, the country continues to struggle with deep inequality and poverty. Why? The answer lies in the legacy of apartheid, which left the country with a stark divide between the rich and poor. The wealth of South Africa is concentrated in the hands of a small minority, while millions of South Africans still live in poverty. Economic inequality has persisted due to historical factors like land distribution, educational opportunities, and access to capital. While South Africa continues to be an economic powerhouse, its wealth hasn't been distributed equitably, making it a glaring example of how GDP doesn't always reflect the lived reality of a country's population, especially in terms of income distribution and social services. When we talk about GDP, we're often looking at a snapshot of economic output. But GDP alone doesn't tell the full story. It doesn't account for income distribution, the quality of life, or the long-term sustainability of economic growth. Two countries may have similar GDPs, but one may have much lower levels of inequality and better social services, which means it's wealthier in terms of human development. This is where the Human Development Index, HDI, comes in. HDI is a more comprehensive measure, taking into account factors like education, life expectancy, and income inequality. By looking at both GDP and HDI, we can get a fuller picture of a country's true wealth and prosperity, helping to understand how economic growth translates into human well-being for all its citizens. For many African nations, the question isn't just about growing GDP. It's about creating inclusive, sustainable economic growth. How can countries like Nigeria, South Africa, and Angola break free from the cycles of inequality and instability that have held them back for so long? How can they ensure that their natural resources, industries, and growing populations benefit everyone, not just a select few, and foster an equitable distribution of wealth and opportunity across the board? It's important to understand that Africa's economic potential is enormous. The continent is home to some of the world's fastest-growing economies, and it's rich in natural resources, young talent, and untapped markets. But growth needs to be more than just numbers on a balance sheet. For Africa to truly thrive, it needs to address the systemic issues that have hindered its economic development. Issues like corruption, political instability, and reliance on a narrow set of industries. Countries that succeed will be those that diversify their economies, invest in education and infrastructure, and create systems of governance that promote transparency and accountability, ensuring that long-term economic prosperity can benefit future generations. Africa also has to address one of its biggest economic challenges: job creation. The continent has one of the world's fastest-growing populations, and the youth bulge is both an opportunity and a risk. With millions of young people entering the job market every year, Africa needs to create millions of jobs to avoid mass unemployment and social unrest. Countries that can harness the energy of their young populations by providing education, training, and access to jobs will be the ones that thrive in the future, transforming demographic challenges into opportunities for growth and innovation. So, why are some African countries richer than others? It's not just about GDP. It's about how that wealth is managed, who controls it, and how it is distributed. It's about strong governance, diversification of economies, and the ability to invest in human capital. The wealth of a nation is about much more than its resources. It's about how those resources are used to create sustainable, inclusive growth that benefits all citizens, especially in the long term. As we look toward the future, the real question is, can African countries break free from their historical constraints and build economies that are truly inclusive. How can nations that have struggled with poverty and inequality become the powerhouses of the future? The road to economic prosperity in Africa is challenging, but it's also filled with opportunity. By investing in people, diversifying industries, and addressing governance issues, Africa can unlock its true economic potential and ensure that the future of the continent is one of shared wealth and prosperity for all. If you want to dive deeper into the complexities of African economies, understand the real drivers behind GDP, and explore what needs to change for countries to truly thrive, scan the barcode to join the Popcentral community. Become part of the conversation shaping the future of Africa's economies, and stay informed about the steps countries can take to secure a prosperous future for their people and businesses. This is the business dimension, and the future of Africa's economies is just beginning, with more untapped potential ahead. Scan the QR on the screen for more.